we move on to AU Small Finance Bank, which has increased its interest rates on deposits for savings account by 25 to 50 basis points. The stock too is trading a percent and a half higher. Now, what is the rationale behind this interest rate move, and what does the road ahead for the bank look like? Let's ask the management. Joining us now on the phone line is Managing Director and Chief Executive Officer Sanjay Agarwal. He's live with us. Mr. Agarwal, thank you very much for joining us here on Bloomberg Quint. By how much will your incremental cost of funds rise due to that 25 to 50 basis points hike in savings rate offered, and also given the fact that market borrowing rates have continued to inch up?
So thanks for this, Shraddha. And so I think, as you know, our this saving rates is the cheapest source of money after current account, right? And our deposit base is around 7,800 crores by March. In that, the stake of SA is around 23%. So, and we want to actually increase the share of this in our overall deposit and liability for this year. And so I think by increasing just 0.25% basis on the 10 lakh to 10 crore will not have significant impact on our cost of fund, because overall also we have decreased our AUM cost of borrowing by 150 basis point last year, and we believe that we'll also get another 100 basis point dip this year. And to achieve that, this interest rate has been increased.
Great, all right. Sir, then what about the yields? How have the yields been moving?
So there is a pressure on yields, because I think the whole competitive nature of the whole lending industry has changed in the last 2 years. So there is a lot of competition there, and we become bank. We had access to our cheaper cost of funds. So I suppose the yield is around now 13 to 14% range, but I think we are getting compensated because of drop in our cost of funds.
All right, so then with this higher interest rates on savings account, what is the kind of deposits that you expect to garner in FY19? I believe your current deposit book stands at about 7,800 crores. And again, how could that CASA proportion shape up, from the current 34% levels?
So I think you will appreciate that, we had just one of the brilliant start of a bank, getting around 45% of our liability funded through deposits, So idea is to take it to around 60% next year, and in that, if you can able to manage the SA, which may be around 30%, and maybe 5% around from CA. So overall, if you can manage in the range of 30 to 35% next year, it will be great. This year, sorry. Yeah.
You're right. So this is Agam here on this side. I just wanted to understand, so we've seen a tremendous growth in vehicle sales. Based on that, how do you expect your vehicles loan book to grow when it comes to FY19 and perhaps years to grow?
Yeah, so this year also, Agam, we have seen that, we had a holistic vehicle book. We do commercial vehicle, we do personal vehicle, we also do the captive, everything on the road, right? So I think we have grown our book by 40% this year on the base of around 4,500, and which is now hovering around 7,000 crore plus. So we hope that, I think this year also the initial feedback or initial numbers shows us that we can do around 40% growth this year also.
So, as far as the asset quality is concerned, what about the NPAs in the vehicle finance and your MSME portfolio, which were hurt because of GST implementation issues and which have obviously ironed out now? So, from a gross NPA percentage or ratio of 2.83% in December, how much could it come down to by March 19, or at least what is your internal target?
So Shraddha, I think we believe that our NPAs are well in the range what we expect from those kind of markets. So we are around 2% gross and maybe 1.9 are around our net NPA. And we believe that, I think this year onwards, there might be a dip off, or we can better it by another 10 basis point or 20 basis point, because we are not in the high range of NPAs. And the kind of market we deal in, which is underserved, unreached, so this kind of NPA levels will be there in those kind of markets.
All right, Mr. Agarwal. Thank you very much for joining us here on Bloomberg Quint. Pleasure speaking with you. But
thank you so much.
Completely running out of time, so it's a wrap on this edition of Trendspotting. But up next is Hot Money with Darshan Mehta. Stay tuned in.